Hello, hello. Welcome to March 30th. Alpha's ATB 65% takes the lead. It's the horse race again. Yeah, KR was in the lead yesterday at 56. It moved up 6 points, but ITB came in from behind of second place and jumped over and took first place today at 65. So there we are as IBT is at 65, working toward that 71.10 for the third ratio. But also notice we're at 65%. So that means we're only 35% points out to get to ROI 100. And then we go to ROI 100, we go to last bar low. There is going to be a little bit of struggle because we are maximizing on the stochastics. But the RSI still has some good running room, and so does the histogram down below. And we are at $2, approximately $2 ATR. And today's close was 66.38. We're looking at 74. That's $8. We're still $4 away from a perfect trade to cross to the third R ratio. But being at 65% here, possibility is that we could get ROI 100 before we get to the third ratio. And if that happens, if that happens, we do it. We just go to last bar low. Once that ROI 100 is hit, and once it goes to ROI 150, we'll take the money right off the top of the candlestick. So that's it for ITB. Going on to KR, who was the leader yesterday, but is still strong. It's running at 62. And that's pretty good. It's running 62. The stop is here on this lower low. 38 more percentage points, and it can get to the ROI 100 also. It'll be kind of nice to get a pair of ROI 100s. We have not had those for a while. So the market turns around, we are able to go on and do that. The ATR is about 90 cents, and we are at a close of $38. $38. And we're at we already passed our third ratio. There's no third ratio to worry about. We just got to do is keep on going looking. So what anticipation of two things can happen? Three. One, we get a spike down, get taken out. Two, we could get the lower low and lower high, so then we end up moving up the stop to the lower low, or we're able to push through, collect 38 more percentage points, and get to ROI 100. All right, that takes us now on to CVS. That CVS is right here, and it's moving forward. Now, remember you mentioned yesterday, Jerremy Newsome, one of my former instructors, he teaches candlesticks. He's very big into candlestick studies, knowing your hammers, your hangman, your spinning tops, long-legged dojis, things of that nature. That is candlestick studies. And this run through here is called a battle, rest, regroup, battle, rest, regroup, up. What do we know that? We know that as accumulation, run up, small pullback, accumulation, plateau, or run up, accumulation, and run up again. So we're looking good. We got some nice, good three nice potentials right in here. But look at here, AT&T is moved into it's moving in up, coming up in the fourth position at 27%. And go to AT&T, and this is the one that I happen to really charmed with because it's a nice steady 45 degree. It's really nice. And see the long tails. There's a lot of buying power down here. There's something down here that is pushing this price ever so much up. And we closed today here on the close was 30.73, and we're looking for 31.44 for our ROI. So that would be 70 cents. 70 cents, and the ATR is 50. So we're still 2 days away from a perfect trade. And then again, nothing is perfect in the market, but we just lay out the groundwork and then look for the market to stay within our parameters. Okay, our next leaders are WBA. And WBA is it's got a nice little cup, not much of a handle, but there is what they call the Cup and Handle by William O'Neill from IBD and IBD Investors Business Daily. If you guys have not heard the news, is now owned by Murdoch News Corp, which is also owns Wall Street Journal. The thing is that the point about the two different publications. Wall Street Journal reports the news behind the stock action. IBD reports the story of the price action. So there's a difference there. So the difference is that it's like, let's say that Apple's coming out with a new product. Well, Wall Street Journal will be all over it. Like, what's the new gadget going to be? What market share? And what's the target market and stuff like that. On IBD, it will say, okay, Apple's coming out with a new phone with these features, and the anticipation of the market is going to be an expectation of a 5 or 15% run based on past history. That's what IBD does. Those are the difference between the two publications. And between those two, it's a world of absolute knowledge. And I highly recommend, if you get the digitals. Paper tends to pile up around my room, and my room is a mad science, like a mad scientist, things everywhere. So digital, go in, scan for the stories you're looking for. It will even share some of those stories, and then be able to avoid clutter. Okay, coming on now close to our last final of the positive is Adobe. And let's go. I forgot. The close here on WBA Walgreens is almost $53, and we're looking at 60. That's $7, and $7, and we're $1.40. So we're up maybe possibility 6 or 7 days away. Depends upon what the action happens. Stochastics, as you notice, is sort of flatline, but it's resting. And RSI is rising, and so is the histogram. These are my three keys. Working with this theory, working with price action. Okay, coming on down to the final positive, and that is Adobe. And Adobe is, okay, these are the rules of engagement. I wrote here on the Doji chart, which is a point we'll go ahead and review that in closing. So now it's developing a nice 45-degree upturn. It is a very heavy stock at 504. I took in this stock here at a delta 15. Delta 15. It is low. A delta 15 means that I have a 15% opportunity that it's going to make it. But the reason why these options are extremely expensive at par, which is at delta 50. So delta 15 was the only place I was able to find a nice entry that met our criteria to get into this trade at we got filled at 570. We're anticipating getting filled at $5.87. What's the options estimated? And then AOC is actual option cost, and came out to 570. So it wasn't not a bad fill. So let's go on now. Looking here for our next situation is just get to that third ratio with a close of 465, and it's approximately $13. So 465 to 505 is $40. $40 divided by 13 is approximately 3 to 4 days away in a perfect trading world. But that would be the explanation. So in closing, let's review the rules. The first rule is you want to risk one risk of 3 for 3 reward. That's what the 3-to-1 ratio rule is all about. Entry, exit, right there. Until such time, rule number 2, you close above the third ratio, and then you look for the dipper low, which is our higher low, lower low, higher low. There's the pattern, but we can't initiate this pattern until we get that close above here at 504. Then at ROI 100, we take profits, last bar low, and if we have 150, we take profit anything off any price that closes below that high. And with that, we'll close out today's report of Losers Become Winners with